I think we've got this 6-year period, that's all we're left with now, where we can really set up our future before the world changes dramatically. Now there's the applications layer. So I think the blockchain layer, just to put it in financial terms, we're at 2 trillion-ish today. I think it goes to 10 trillion in this cycle, and we end up somewhere, let's say 2035, at 100 to 200 trillion. Right, that trend is a fucking mega trend. Do that one thing. But I don't know how much returns we get from the latter part of the cycle.
The widely acknowledged view among financial analysts, economists, and advocates for sound money is that the global monetary system is on the brink of collapse due to unsustainable practices and an overwhelming global debt burden. This consensus believes the current fiat currency system is doomed to obsolescence. However, opinions diverge on the solution. While some advocate for a return to the gold standard, others, including cryptocurrency investors, see blockchain technology as the answer to creating a scarce, deflationary, secure, and permissionless financial system. Renowned macro analyst and cryptocurrency enthusiast Raoul Pal is optimistic about digital assets, viewing them as a unique investment opportunity for all investor classes. Unlike many in his field, Pal does not see the necessity for the fiat system's collapse for digital assets to thrive. He suggests that the monetary system's next phase is already developing, with governments able to delay any immediate crisis until a more seamless transition can be achieved. Pal's theory of an exponential age emphasizes the transformative potential of robotics and artificial intelligence, AI, to address the critical issues of aging populations and declining productivity. He argues that AI and robotics will massively boost productivity by scaling knowledge and physical work infinitely, potentially resolving the debt crisis and significantly enhancing GDP growth without necessitating a global financial collapse. In a recent video, Pal elaborates on his vision for the exponential age, expected to be fully realized by 2030, radically altering our understanding of economics, finance, and investment. He warns of a narrow 6-year window to build wealth through cryptocurrency investment, highlighting the potential to partake in a future $200 trillion industry. Pal's insights not only propose a way forward through technological advancement, but also emphasize the urgency of adapting to these changes. He invites viewers to engage with his content and join a broader conversation on preparing for a dramatically different economic landscape post-2030.
I really don't understand how it's going to play out, but I do know between now and, let's say, 2030. Now, I'm not sticking to that date. It's not like 2030, the date of doom. It's like somewhere around then we start hitting this economic singularity. It's not the singularity, but it's economic where we can't even predict how economies work anymore. If that is the case, then I don't know how investing works. So how I'm thinking of it myself, and I'm fortunate to have built some wealth, but I'm not the richest man in the world by far, but it applies to everybody, is I think we've got this period, this 6-year period, where we need to build as much wealth as possible because things are clear. We've been given the greatest macro opportunity of all time, when everything is correlated and the everything code is driving everything, then let's take advantage of it. Take advantage of it, because after 2030, I don't know what it looks like. Humans are adaptive, and I've talked about this. I think it'll be more about social communities and how we add value to online digital networks, and it's a much longer conversation for another day. So I'm not worried about humanity per se, I'm just worried about the how to unpick yourself bit. I think we've got this 6-year period, that's all we're left with now, where we can really set up our future before the world changes dramatically, and we don't have the everything code anymore. We don't have most of the things we know anymore. Technical analysis, what does it mean? What does portfolio analysis, what does anything mean? What does reading news mean when you've got AGI doing stuff? But one thing I do know is that the digital rails will be how all of this works. Blockchain is how AI, robots and everything else will move payments around. We're seeing all the governments are moving that way. So I don't worry about that. But, at some point we'll get to maturity phase, and the gains that we've made from the adoption phase won't be there anymore. So we need to be involved in the adoption phase of blockchain technologies before it gets to the maturity phase, where the returns are more like utility returns. Now there's the applications layer. So I think the blockchain layer, just to put it in financial terms, we're at 2 trillion-ish today. I think it goes to 10 trillion in this cycle. and we end up somewhere, let's say 2035, at 100 to 200 trillion. Right, that trend is a mega trend. Do that one thing. But I don't know how much returns we get from the latter part of the cycle, because it's always the first part, right, that you make the real money from. I then think, okay, what bloody assets do you own past 2030? Bonds are trash. Equities have been trash. We don't even know what companies survive. How long do companies last for? I think they're going to be more like meme stocks. They get attention, they die. We'll see companies being built with one person. We won't need the amount of people, so everybody can build companies, and maybe they last. So it becomes like this meme economy, this ICO economy, where things rise and fall, and the capital cycles are much shorter. I'm concerned, how does VC work in a world where AGI or just AI is iterating product companies' markets all the time? Things kind of blossom and then die. Some rise, but I think much less rise, because you keep getting disrupted. Everybody gets disrupted by each other in this kind of endless cycle. Well, where do we invest beyond that? My general view, and I'll flesh this out in a much broader piece at some point. In the end, I'm actually thinking about, well, okay, where is my long-term savings? Outside your lifestyle bank, outside some property that you use and live in. Where do you hold long-term wealth in an economy that's so disruptive? I kind of like digital art. I think that NFT high-end digital art remains the top of the pyramid of wealth, as art does now. So
Pal's vision of an impending technological exponential age closely aligns with that of Cathie Wood, the CEO and founder of ARK Invest. Wood projects that the global equity market capitalization of 5 key disruptive innovations, artificial intelligence, blockchain technology, robotics, genomic sequencing, and energy storage, will soar from $19 trillion to over $220 trillion by 2030. In stark contrast to the past century's average global GDP growth rate of 3%, both Wood and Pal foresee these advancements boosting the global GDP growth rate to at least 8.5% post-2030. Even as some economists anticipate a decline to an average growth rate of 2.6% in the coming years. They argue that the rapid development and merging of these technologies will fundamentally alter the global economic landscape. Returning to Pal's discussion, he emphasizes the critical importance of positioning oneself through cryptocurrency investments now to fully leverage the transformative economic shift anticipated within the next 6 years.
I've gone through the story, which you know, I've explained it many times to you, how things are. No growth, high debts, aging populations. I've explained that the central banks are debasing currencies, all of fiat. That the entire fiat world peaked in 2008, which is one of the reasons why since then people are so pissed off, because nothing's working. Some assets have continued to rise, but those are the ones at the center of the debasement of the reserve currency, the US dollar. That's why US markets look better, but once you adjust them for deflation, for debasement, they look just like the European stock market in dollars. It's all going nowhere. So then we found that, okay, the government understands this too. This is the great thing that I see, is like the government doesn't know what they're doing, the Fed are idiots. They know exactly what they're doing. All the central banks understand the game. The game is, do not let the great baby boomer complex go bust. Do not let the system implode. We have to offset falling trend rate of GDP by higher debts at government level to maintain the economic structure that we have. We can't pay for that, so we have to print money to do it until this population bulge is left behind and we change the structure of economy. So there's the game. So the game is understand that. Forget all the other things that people talk about. It's all fucking noise. It's all mid-curve. Don't mid-curve it. Buy and hold, things go up. The far right of that is they go up because of so much evidence of what they're trying to do, and why they're trying to do, and how the economy's broken and what it all means. Everything in the middle, I think, is mid-curving it. And it will cost you money. You will literally not be as wealthy as somebody who just understands the buy and hold strategy in the right assets, crypto technology. So we've got that, thank God. Crypto is the super trend. That is the one, the biggest gift we've ever been given as an investment. You know, I've expressed this so many times to you. You don't believe it when the market's down. Raoul's a moron. Why did he get us into that? Now it's back at all-time highs. So, oh, he's a genius. No, it's the same bloody thing. It's bought and hold. I'm just the moron on the left of the bell curve. Just don't mid-curve it. And don't f*** it up. Don't f*** it up means don't try and do things you shouldn't be doing. Just buy and hold a core group of good assets. Knock yourselves out on other stuff. The other thing is, as I said, we've seen this cycle before, the financial repression. We've seen the cycle. Everything is cyclical. Everything comes down to basically two assets. A rich really comes down to one asset. But you need to be involved in technology. You need to understand what the hell is coming, because it is going to change everything you do. Whatever industry it is, I don't care. It's going to change. And you need to be prepared for that. So how to unfuck your future gets us from now to 2030. After that, it's a whole new future out there.
Recent data from the U.S. Treasury Department reveals a startling acceleration in the growth of the national debt, with an increase of $10 billion daily and approximately $1 trillion every 100 days. This marks a drastic shift from the historical pace, where it took more than 200 years to accumulate the first $1 trillion of debt, to now, where the same amount is amassed in just over 3 months. To suggest that future generations of Americans face significant challenges is an understatement. Currently, the United States is burdened with over $34 trillion in funded liabilities and an estimated $200 trillion in total liabilities, once unfunded obligations are considered. Despite these daunting figures, Raoul Pal believes that a significant increase in productivity, driven by advancements in AI and robotics, could offer a solution without causing lasting harm to the financial system. Do you concur with Pal's optimistic view that technology could pave the way out of this predicament? Share your thoughts and insights in the comments section below. Additionally, make sure to subscribe to the channel and activate post notifications to stay updated with more discussions like this one. Thank you for watching.